James, I was all excited when Amazon was up 11%. I was going to email you and be like, this is a huge win, 50. And then it all turned around because they said April's week on the cloud.
You hit the nail on the head, Kelly. I mean, basically, I think the guidance was a head fake. You had better than expected numbers looking out to 2Q, but the question was, where was that growth and outperformance coming from? And unfortunately, we learned on the call, it was coming from every other aspect of their business and not so much AWS. Now, that would normally be a good thing to see the retail business, physical stores, advertising, membership, all these moving in the right direction. But AWS, unfortunately, is a myopic focus on the part of most investors. And when we heard that 500 basis point deceleration in April, that begs the question, what does the outlook look like for the rest of the year? So I think the stock should be more around flat. I think that would be more fair. But at the end of the day, this is something that the company will be able to work through over the next couple of quarters, and growth should resume. So, we're not that worried short term. We're not that worried long term, but short term, obviously, taking a little bit of pain.
Yeah, I mean, Steve, I think James makes a great point that normally people would say, hey, it's great. This business is showing other sources of strength. Right. It's not just the cloud, but that's not the mood today.
Yeah, and especially because Microsoft reported 2 or 3 days before that and showed great strength in the cloud, not to mention specifically in AI. We talked about the number of AI mentions we got. I think Amazon only had like 12 or 13 mentions of AI. So the perception, at least, is Microsoft is more poised to sell AI as a product for cloud and therefore take away some market share.
Did Microsoft mention April trends on the cloud? Specifically?
Not super specifically. I can't recall if they talked only about April, but look, there was just more optimism there because they said, look, in addition to doing exactly what Amazon's doing, helping people, they call it optimize, which really means spend less, and in order to keep those customers, Microsoft's doing that too, but again, they have extra stuff to sell their customers to layer on top of that, and it's all AI products. Amazon can't necessarily do that.
And Brent, I wanted to turn to you and kind of bring up a point that Chris Senek made earlier this hour, where he flagged earnings quality, called out Google, but also called out some of the other mega cap tech companies and said he doesn't like the way that they're achieving these beats. Do you think there's some fairness to what that, to how they're making the numbers each quarter? Does that worry you at all about the sustainability of their kind of core growth?
I don't think there was anything too concerning. I think what we have is a sector rotation back to mega cap away from small and mid, and you have money moving out of banking, money moving out of energy. You have a complete sector reallocation that's pushed this group higher. Everything's slowing. All the mega clouds showed 400 basis points of decel. Amazon, Microsoft, Google, they're all decelerating. So I think what's happening is we're seeing decelerating IT spend. Stocks are going higher because expectations were just so bad. They were so negative. And ultimately, I don't think we're out of danger here in terms of IT spend. We're seeing a lot of companies like Cloudflare and what Amazon said about the trends, reversing. So I think this has more to do with a allocation and expectation going in than how they're reporting. They're all slowing.
Right.
And that is the concern. How long is this slowdown going to be? Is it the rest of 23? Is it going to last into 24? I think that's the bigger debate we're having with our clients right now.
It's ironic that all the recession and hard landing concerns are helping them out. If we all thought we were going to have a great growth year, we'd say, well, rotate out of tech. Their growth is slowing. Everything else, go into Caterpillar. But at a time when we're like, we could be a negative GDP in a couple quarters, they'll say, Brent, don't you think I'll still take 3% or 5% growth in big tech?
Absolutely. And they'll take the pricing power of AI. And, when you look at the pricing power that Microsoft has, for example, it's incredible. I mean, they're charging 50 to 100% more for equivalent products with the AI features embedded. I mean, the pricing power is way higher than we all thought. And I think we're going to see more pricing come out here short term. But the advancements are incredible. And that gives investors at least a product catalyst and some pricing to protect themselves in the short term.
When, James, do you think the cloud will be out of the woods, so to speak?
I think we have 2 more quarters of challenges because things didn't really start to slow down until the fourth quarter of last year. So, this could be pronounced at least for another 6 months. But I think when you kind of put into context AWS versus the other big cloud providers, the other cloud providers are predominantly, Fortune 500 companies. So AWS actually casts a much wider net when it comes to the customers they serve. So unfortunately, it makes them a little bit more prone to cyclicality. But to Brent's point earlier, the expectations were so low. I'm a guy that can normally look through the noise. And even I was like, are things really this bad? And I don't normally ask that question. So the bar was low. And I think, even coming out of this quarter, the bar continues to be largely low relative to where they can perform. So, we think that the next couple quarters could be choppy, but coming out of 4Q, I think that the comps will get easier and, AWS can reaccelerate.